I'm Charlotte McLeod with the Investing News Network, and here today with me is E.B. Tucker, Director at Metallo Royalty and Streaming. Thanks so much for being here.
Thanks for having me.
Great, and we're here now at the Denver Gold Forum. We spoke last at the Sprott Show in Vancouver. That was at the end of July, early August, and you reiterated your call for $1,500 gold, and almost immediately that came true. So now we need an updated gold price prediction. Where is it going next?
Well, I commanded gold to move, and it did, which I'm kidding. But we worked a lot on this. We now are looking at silver. So in our view, gold's going to stabilize here at 1,500. Silver will go from 18 to 20, and so we're focusing a lot of our capital and resources on silver because that to us is the easiest trade right now. And I would be shocked if that doesn't happen before American Thanksgiving, which is only about 8 weeks away. So that's where I would focus. Everyone wants to know the next call on gold, which I do have for you. But I think in the short run, if you miss that move in silver, you're missing a very easy way to make money.
Right, and so silver, are you still looking for $20 silver, or now is there an updated price?
Yeah, I think 20 is a fair place to go. I mean, people say, well, why not 25? Well, I agree that it will run to 25, but I think that trade to 20 is so easy that you don't want to overlook that. I mean, you want to make easy money in life. I mean, this is the Babe Ruth style of investing. You know, Babe Ruth was overweight, he ate all the time, he drank heavily, and he barely worked, and he was the home run king. So what did he do right? He swung at the easy pitches. So that's what you want to do. I mean, when you see silver making that logical step, that's the place where you make money without much competition. And so what happens after that, we'll see once it hits 20.
Right. I guess it does all depend on what timeline you're looking at. So for silver, what should investors be doing? I think we talked last time about what should they do to get into gold, but what about silver?
Well, so it's nice to have some physical silver. It's easy to get. You can give it to your kids and grandkids. You can have lots of silver. It's very cheap. But once you've got that accomplished, the next move is to look at the silver mining firms. Luckily, there's not that many left. A lot of them have failed. So in the summer when we sat down, when gold and silver moved, the big mining companies, the profitable mining companies, they surged. And the little mining companies, the lesser companies, the unprofitable companies, they didn't do that much, which is abnormal. It means there was no speculation in this move. So I think right now what you do is you look at the lesser companies. You look at the companies that when you do fundamental analysis don't look so great. And I know that sounds strange as investment advice, but those companies at some point will play catch up, and people will say, wow, with $20 silver or better, even XYZ company can still make money because it's a dog and it's made lots of bad decisions, and it might come back to life. This is what happens. And so I think you look at those companies that they're not in danger of failing. It's just that they're struggling under the weight of bad decisions in the last bull cycle. And so I hate to name the names because all the CEOs, I'm having lunch and cocktail hours with them here, and they'll be terribly upset. But there's not that many, so it's very easy to analyze the sector.
Yeah, one conversation that I've been having with a lot of people here and in Beaver Creek last week is the larger companies seem to have moved, and we're waiting for the smaller ones to follow. So would you say that's kind of dependent on the price, or are there other things
Well, what does that tell you? So in 2016, the smaller companies outpaced the bigger companies. That means there was a speculative investment theme going on with that rally. This time, the big companies outperformed the small companies, which means that there was no speculation. This was serious money playing with serious companies. There was no hot money, if you like. That's where things get very exciting, when people bid up and speculate on what the next company to get taken over or the next company to have some sort of success. So that's totally, you're right, and it's totally different from what you would expect to see. So I think those companies were left behind, and that's where the fun is going forward.
Okay, and taking you back to gold for a moment, did you have an updated prediction for us?
Right. So the thing that's shocking is gold goes to 1,500. It makes almost no headlines. I mean, there's 50 times as much gold in the world by market cap as there is Bitcoin, and the headlines for Bitcoin outpace gold a lot of times, 10 to 1. I mean, it's very easy to talk about Bitcoin. You don't see any talk about gold. When I talk to professional money managers in New York about the move in gold, they're just, well, that's nothing. That's only for quacks. No one owns that stuff. And that's just not true. I mean, gold, there's 10 trillion worth of gold in the world. There's 25 times that much debt. Gold is the average man's antidote to a world that's swimming and drowning in debt. It's very important. So for gold to go up 50%, it's still a drop in the bucket compared to world debt. But here's the prediction: next year we think gold takes out its old high. So that's when it wakes people up. And right now, no one's paying attention at 1,500, which means that once it consolidates, it can march higher. No one will care. No one will know how to trade it. There's no experts on gold. You go to the big banks, the Merrill Lynch's, the JP Morgan's of the world, it's not that many people covering gold. There's not a lot of information out there. And so it takes out its old high, and I think people realize this is serious. And so for us in the gold community, now's the time to position, because you don't want to then be involved with all these people that have no experience in the gold market. You and I come to this conference all the time. We know everyone here. There's not that many people, and it's very telling. And so one day there will be a lot of people that we don't know, and it'll be a much higher profile musical act at night for the cocktail hour, and that's the time when you probably want to get out of the market. That time's not today. So we're in the very early innings of what's going to be a big rally.
Okay, yeah, that was definitely going to be a question. Is it too late? No, there's still time for people to...
So much time. It's barely even, the game barely started. I mean, it is one inning, and so you have so much time. And people are really demoralized in this market. They've been beat up, and the market's been down for so long. They've kind of sold at the first sight of any sort of rally. Don't do that. You don't want to trade this type of move in gold. This is a generational move in gold. There's events in the world that are happening right now that are setting the stage for what we'll be talking about in 5 years. We'll say, how did you know? Well, it was very obvious. There's things being blown up. There was the Fed was doing a silent quantitative easing. The Fed was involved in all these things, and the debt loads were growing. There was negative interest rates. The economy was crippled by leverage, and consumers. I mean, think about it. It's all happening. It's all happening right now.
Yeah, I was going to ask you to review the factors that are driving this move, but there's really so many, it's hard to go over them. Yeah.
So many, and you don't know which one will be it. I mean, I always tell people in 2008, I had what goes down as one of the luckiest trades of my life. I sold an insurance company a week and a half before Lehman Brothers went down. It was my biggest stock position, and people say, well, you knew there was going to be a crash? No. I knew there were several things happening that were very strange, and I didn't know what to make of them, and I didn't feel comfortable, and so I sold. I didn't even sell all the stock, but I sold a big portion of it, and I used that to fund a business that we started, and it turned out to be very fortuitous. That's how I feel right now. I look around, what's going to be the catalyst for gold? We'll know later. Now we know the catalyst in '08 was Lehman Brothers. We didn't know that at the time. Bear Stearns also failed. Sold for $2 a share. Everyone forgets about that. It was a massive loss. So they have all these things going on back then. There was numerous other companies that failed, and nobody talks about them. They talk about Lehman. There'll be something happening now that we'll talk about in 5 years after gold's significantly higher. And so what you do is, instead of looking for that one thing, you take the easy trade. You take the obvious easy trade, and you get involved in this business now, and you won't believe the returns that happen in one of these cycles. And a lot of people haven't been around for one of these cycles. It gets really hot really fast.
Okay, so everybody here has been talking a lot about the price of gold. Are there any other trends you see in gold that investors should be aware of as this is happening?
Well, 10 years ago, when you talked about manipulation in the gold market, people thought you were crazy. I mean, they thought you were a conspiracy theorist, is what they would call you. Now, Wall Street Journal has an article the other day about manipulation in the gold price at JP Morgan and traders being charged by the Department of Justice right in the Wall Street Journal. So, I mean, what does that tell you? I mean, it tells you that whatever was happening in that world, that whatever was going on, first of all, I don't care about gold's price suppression. In fact, I'm in favor of it, because if you buy physical gold and the price is being manipulated lower, it's great for you as the buyer. If they were manipulating the price of Ferraris, no one would complain. Okay, so that's how I feel about that. But I am interested to see that coming out in the newspaper, and I think it tells you that the tide's turning. And I think that what's causing that is that enemies of the United States were soaking up physical gold at record pace. And so at some point the gold price has to go up so that it calms our enemies buying so much gold in the open market. See, everybody knows the value of gold except for people in America, it seems. So to me, that's the interesting thing. Now, I don't think you have to spend years studying that. I think it's very obvious, and so you can get involved kind of and just position yourself so that when people finally wake up and realize that that's what's going on, you're already there.
So would you see an end to manipulation eventually, or is that just something we already always will have?
Well, to one degree or another, you always have it because then someday they'll manipulate it to the upside. So I mean, this always goes on in life. I mean, it happens anytime there's a lot of interest in a sector or there's something that can be manipulated. It will be manipulated, but you can't get rid of that. Well, I do think now the price move in gold was almost, it was just drug higher on a leash up to 1500. It was really quick. There was no technical problems in the chart. It was very orderly, and it was almost as if someone allowed it to move up. So I mean, I don't really care to speculate on the kind of who's behind. I don't think it really matters. I mean, I think people mistake having to solve all these big governmental deep state problems. Just look out for yourself. I mean, there's just look out for number one, and no one else is going to look out for you. You might as well do it for yourself. And here's an opportunity to make serious capital gains in a sector that's changing rapidly. And so I think that's where the focus is. But maybe it has to move a little bit higher, And I think it definitely, when enemies of the U.S. are soaking up tons and tons and tons and tons of gold, you want to make that a little more expensive.
Okay, that's everything from me, unless you've got any final thoughts you would want to leave with investors.
One final thought. You have to consider what's the best, safest, smartest way to profit in this gold bull cycle. I think it's owning royalties. It's the best business I've ever been involved in. I've never seen a business that I liked more than the royalty business. It takes very few people. It's very low overhead. It's the closest thing to having taxing authority I've ever seen. It's amazing business. And so for me, the play is to own royalties as this move expands. Every $100 in gold makes a royalty massively more valuable. And so if you bought those royalties at $1,300 gold and you see much higher prices, you will not believe the value, and you don't have any of the risk of digging holes in the ground with dynamite in dangerous countries.
Perfect. Thank you so much for being here. We will be checking back with you about your predictions. Once again, I'm Charlotte McLeod with the Investing News Network, and this is E.B. Tucker with Metallo Royalty and Streaming.